USD gets slammed. Is the dollar's bull run over? That is the question I am looking at today. Guys, as I'm sure most of you all know if you've been following our channel, up until the end of last week, the dollar was on a massive bull run. Why was it on a bull run? Well, coronavirus was paralysing the Chinese economy, and as a result, FX markets, they were asking, okay, who is most exposed to this Chinese economic weakness? Australia, New Zealand, Japan, even the Eurozone, they're all quite heavily exposed. The US, less so. As a result, you saw weakness in all of those currencies and strength in USD. But guys, things have changed a lot in 1 week, right? Coronavirus has gone global. We're seeing the number of cases in Europe rapidly rising, in South Korea and Japan rapidly rising. We're even seeing the numbers in the US start to rise. Now that changes a lot because instead of us just now expecting economic weakness in China, we're now expecting economic weakness globally because people are going to want to quarantine themselves, they're not going to want to travel. All the stuff we've seen in China, we're hopefully not, but we are likely to see globally. Why does that mean weakness for the USD? Well, central banks, they're going to have to react to this. The Fed, the ECB, the BOJ, they're all, if things do go bad, they're all going to have to ease their monetary policy to stimulate the global economies. But the ECB and the BOJ already have their interest rates in negative territory, and they already do QE. So there's not really that much more easing that they can do. The Fed, however, can do quite a lot. They've got their interest rate at between 1.5 and 1.75%, so they can cut it right the way to zero or lower, and they're not even doing QE, so they could introduce a QE program. So in recent days, what have we seen in expectations for central bank easing? We've seen money markets pricing 70 basis points worth of Fed easing this year, but only 10 basis points worth of ECB easing this year. That is dollar negative, guys. When you expect a central bank to ease, that is negative for the currency because lower rates, people are going to want to move their money out to get better rates somewhere else. So guys, we are all over these themes. Central banks, coronavirus, they all interlink, and we cover these things every day and we tell you how they affect the FX markets. Guys, massively important to your trading. I will see you in the next one.